Hello traders, welcome to the channel. In this video, we're going to learn about EMA, that is nothing but exponential moving average, and different types of EMAs that are used on our chart for trading in intraday and other types of trading based on the time frame that you use. If it is intraday, it is suitable for 15 minutes, and for swing trading, it can be a week or a month. It depends on number of trades that you take, and without getting into the details that you make a confusion, right? Let me make more simple about this EMA. And this EMA is nothing but exponential moving average, and this exponential moving average is calculated based on MA moving averages, nothing but, if you know SMA is simple moving averages. It depends on n equal to 10. Okay, n equal to 10, in the sense it will be calculating the last 10 close prices. This n also called as period. N period, nothing but the number of close prices. Okay, and these are 10, and the average, nothing but the mean of this, is called as moving average. Okay, moving prices are 10, we are taking the average of it. It is nothing but a simple average, right? So this is simple moving average, and for this we will be getting a point, and for the next one we will be getting a point, and the next one will be getting a point. Like this we will be getting some points, and if we draw a curve like this, a line, right, then it is SMA plotted. Okay, this is SMA, and for this we have the main core logic is for buy and sell. How we gonna perform this SMA on our chart? Okay, for buy condition, and if we consider this as a candlestick and this as a candlestick, and if our SMA line, right, I have said that this SMA line, if it forms like this, means SMA line is below the candlesticks, and nothing but just focus on the line where it is, whether it is upside of this candlestick or downside of the candlesticks. If it is under this candlestick and it is going like this, right, which is nothing but the candlesticks are always above, nothing but you can take a trade over here. Okay, you can take a buy position over here, and where can you put a stop loss must be, okay, for better approach you can take the previous candle low. It is generally taken as previous candle low. This is stop loss. Okay, done. Now let's take sell position. Okay, and in this sell position, when we take a sell position, we have taken buy position. Okay, we have taken a buy position over here, and it is moving like this. Okay, and the candles are also formed like this, and this is the buy position we have taken, and we need to exit from the when we have to stop our trade, right? So how long we can go, and when we can stop, and when we can sell the asset that we bought. Let's look at that one. If a candlestick forms below the SMA, okay, like this, it will be forming like this. Okay, if it forms below the SMA, then we can take sell position over here. Okay, this is for the sell position for the buy position that we have taken previously. If it is in the second case, if we want to take a short sell means firstly we will be taking the sell position. Okay, and this this is the position. We'll be waiting for the candle to form under this line, SMA line. Okay, that's where we'll be taking sell position and we'll be waiting for the buy position. When we take a short sell, it has to go down only, okay, and there we can mark a buy position, then it will complete a position for us, and it depends on how deeper it goes, the profit we'll be getting in short sell. Okay, let me summarize this SMA. Okay, SMA simple. Buy position is forming candles forming above this SMA line. Sell position is candles forming below this SMA line. And where we can keep the stop loss, we can keep the stop loss here, nothing but the place where the low of the previous candle is formed. Okay, the low of the previous candle. This is all about SMA. And let's get into EMA. And I'll be telling you the reason why I have told you SMA before EMA, and what are the differences and what are the advantages SMA EMA. Okay, coming to EMA. EMA is exponential moving average, and we'll be in simple words I can tell you, because we can focus more on practice, not on the theory, right? In this, just know how to take a buy position, how to take a sell position, which one to use, either SMA or EMA. That's enough. Now in this EMA, in this moving average, we are applying a exponential on moving averages. That's why it is called as exponential moving average. And let's concentrate on buy position. Okay, buy position is, if it is in this, we will be having some types of EMA. Similarly, SMA we have 90 also. 90 means 9 EMA. These are nothing but 9 is nothing but last 9 close prices of that particular stock or particular crypto asset. And 0 EMA means there is no line, which means only single line is there, only single line. Because we will be having double cross EMA, where we will be having multiple lines like this crossing over, and we have a line like SMA that we have EMA also, where 0 EMA and 9 EMA present over there. Let's look at some of the types of this EMA, and after that we will be practicing some on Fyers. Okay, first one is double cross EMA. This double cross EMA similar as SMA, if it goes above okay, let me make it more simple, like this, right? The line. Okay, this is double cross EMA, and we'll take a buy position if it is, the line is below the candle. We'll take a buy position, and we'll take a sell position if it is going down. This is double cross EMA. And next one is EMA Cross. EMA Cross. EMA Cross is, we'll be having two lines. We'll be having two. One is short and next one is long. This is double cross. Nothing but EMA Cross. EMA Cross. And in this, as I've said, short and long, two lines, right? Short is nothing but short period. nothing but short, nothing but few or less number of periods. And standard are considered as 9 EMA, nothing but 9 last close prices, and 20 or 26 EMA for long. This is generally considered. This one is generally considered. And let's go for the daily usage case. Okay, in daily usage, the EMA crossover daily usage will be using standard of 5 EMA for short and 20 EMA for long. When we get into a graph, we'll be understanding easily, right? And yeah, I can explain you buy and sell positions over here itself. And let's consider this one is the pattern of these candles. These are the candles. Okay, for example, if I consider, and I am considering blue as this 5 EMA and red as this 20 EMA. Okay, and this blue line, nothing but short, crosses above. Okay, here you can see over here, this is the place where blue crosses above the red, right? Short, nothing but 5 EMA crosses above the long EMA. Then we'll be taking a buy position over here. Okay, here we'll be taking a buy position. And when this the same blue line crosses below, nothing but if it goes like this. Okay, now you can see over here where in this place the short EMA comes below the long EMA, then we'll be taking a sell position over here. Sell position. This is the strategy of EMA cross, and we will be having a triple EMA also. In this triple EMA we will be having the same, but the difference between double EMA and triple EMA is the closeness. Just like double EMA and triple EMA. Okay, and in this double EMA, okay, double EMA will be, the graph of double EMA will be like this, whereas the same graph of triple EMA, we have increased this EMA, right? Then it will be closer. Okay, it will show a bit closer. Then this is the main difference between double EMA, triple EMA, and we have seen EMA cross also, and EMA 9 close 0, and simple moving average. And we'll be having one more like SMA and EMA in a single strategy as SMA and EMA. Okay, if EMA crosses above, let me consider this as SMA. This one is okay, SMA, EMA. And the main difference between SMA and EMA is EMA is mostly usable these days, but previous cases SMA is used mostly, because the main difference between SMA and EMA is when we have candlesticks like this. Okay, the SMA gonna be a rigid or it gonna be solid for the volatility. Just like if the graph if the graph goes like this, then SMA will be like this only. But in the same case, EMA will be like this, because it gonna give you more volatility here. Volatility, more volatile EMA. So if you want to know the instant volatility of the market, use EMA, otherwise use SMA. It's gonna give you some standards in trading. So it's better to use EMA only, but use time frame like 15 minutes, 30 minutes a day, like that, not 1 minute, 5 minutes. We can decrease the volatility, right? That is the best case. And let's get into this SMA and EMA, the last one, strategy. And I am considering this blue. Okay, blue as EMA, this blue as EMA, and this is a blue line, and this red line is SMA. And the strategy over here is, if EMA crosses above, here we can see that it crosses above, right? Yes, it crosses above. It crosses, will be taking a buy position over here. EMA crosses above SMA, will be taking a buy position. Else we will be taking, if it goes below, we will be taking a sell position. Now we have seen EMA, okay, EMA, SMA, and its types mostly used in technical indicators. Those are double EMA, which will be having a single indicator only, single line only, and triple EMA. It shows the graph closer. Okay, and what else we have? Triple EMA and EMA cross, right? EMA cross. EMA cross, in the sense it will be having a crossing lines, so two lines, a byline and a short line and long line, EMA cross. And we have seen EMA with SMA. Yes, let's move on to any platform. We'll be looking at this Fyers initially. Okay, let's move with the password. Yes, and I'm gonna show you the holdings that I have in this Symbiotics. Okay, and the time frame that I have set, you can see double EMA, triple EMA. Let me close all this. Okay, I'm gonna close all this, and I'm gonna show you from the scratch, where, let me open this. Okay, this is the trade candlestick pattern of this Symbiotics investment. And in this, here you can see FX, right? Just select EMA. Okay, once you select EMA, you can see the different types of EMAs that we can use for this trade. Okay, moving average, exponential, EMA cross, double EMA, triple EMA, MA with EMA cross, nothing but SMA with EMA cross. So we have seen all these, and we're gonna look at the graph, okay, with individual. Let me take the first one as moving average exponential. Now it is showing on the graph. Yes, this one you can see here, moving average 9 close 0. And here let me zoom this one and how it is showing. Yes, you can see here, based on the strategy of EMA moving average, if uh, you take a buy position over here, you can see this candle, right? This candle, okay. And I'm gonna give you another tip over here. Here if you see, let me zoom a little bit, and this side too, okay. If you see this one, okay, the candle which is after the red candle, and this one I'm saying, this one is having buyers very few, right? Not a large amount, or it is not showing a big volume candle, right? Here we have this value. For confirmation I am just making it invisible. You can see the candles were gone of this value. So the value you can see, right? And this value gonna give the strength of the buyers, and red candle gives the strength of the sellers. Now you can see that, just look at the left of this screen, and after this red we have this green candle where buyer's strength is less, and it is almost below the this EMA line. And let's wait, and you can see the candle which is left of this green almost above, just 10% of that is below the line. And the next one is, and the trade that you can take over here is the candle which is there left of this, which is nothing but 10% below the line. You can take the below of this 10% of the candle which we are talking about. This 10% of this part is below this line, right? This is the leftmost candle. Take the stop loss over the below of this, nothing but the 10% over there, right? Take the trade stop loss over this, and take a buy position at the next candle entry, nothing but, let me open this one, and here is the stop loss at 430, and here is the buy position 5.46, okay. 5.46. When you are taking a trade, you should be able to, you must be ready to lose even 10% of the capital that you're gonna trade, okay. If you would have taken a trade at 5.46, okay, even even if you go for above this one, you can see that it has come to 5.93, okay. This 5.93, I'm talking about the candle which is after this red candle, this candle I'm talking about, and it would have gone till this 15.48, okay, 15.48. And then after looking at this, you can simply come out of this trade by looking at this value. Just look at the below candle value, and it is formed a red candle value where sellers have been started. Then you can come out of this trade. And let's get into the next EMA, that is double EMA, triple EMA, MA with EMA cross. If you give a simple click on this, it gonna display on that, okay. EMA cross, yes, we have all these candles. Let me make invisible this one, double EMA2, triple EMA2, MA with this one also. Now we have EMA cross 926 only. Let me change this by clicking on this. As I have explained, I'm gonna use it as blue only. Short one is blue, Okay, and the long one is not green. Let me take it as red, because I have explained with the same, right? And the meeting position nothing but crosses, I will be using yellow, that I have used, right? Yes, let me minimize. Yes, we have a position over here. Let me zoom. Okay, zoom. Yes, yes, you can see, right? The neat buy position. Just we have applied the strategy of EMA, we got this. And most applicable strategy this one, and the inputs should be 5 and 20, not 9 and 26. That is generalized one. Use 5 and 20, you're gonna get a optimize, nothing but exact trade you can take. 5 and 20, this is the same that I have explained, right? If this blue line goes above this red line, you can take a buy position, and same with this one also. If it is crosses below, you can take a sell position. And let's get into MA with EMA cross. And the same this green one is this green one. Okay, let me change it to blue, and EMA is blue, and this one is red, and the crosses will be yellow. Okay, the same with the EMA cross also, right? You can see this is the buy position and this is the sell position. And let's see the difference between EMA and double EMA, triple EMA and double EMA, where let me take the color. Okay, where green one is double EMA, let me put it as blue, and triple EMA is red. Okay, you can see, as I have explained, triple EMA gonna be very closer. Red one is triple EMA, right? Yes, red one is triple EMA. This triple EMA is very close to the candles, whereas the blue, nothing but double EMA, is a little bit far. You can see here the difference. So, and the outcome of this is, you can use any of these EMAs, and the time frame for intraday most suitable is 15 minutes. Okay, and let me take, I've kept it 1 week, because to get the neat candlestick formation I have used as 1 week. Okay, and for analysis part, right, I have used this 1 week. And I'm just closing this double EMA, triple EMA. Just take EMA cross 520 and do trade for better profits, which I have experienced personally. I just saying, and for this educational purpose only. And if you want to use for any other EMAs, just take, but don't skip the stop loss. You must keep stop loss, then only take trade. Otherwise you're gonna lose entire trade amount or entire capital, which I have experienced personally. And no trader, dear trader, don't take any trade without a stop loss. Okay, and this is all about EMA and multiple types of EMAs in our daily life that we use. And also, if I go to Wazirx also, you can apply the same. I'm taking here BTC for example. Here we have 1 day frame, let it be 1 day, and I'm going to use candles, and we have these candles, and we have these volumes also. And let me take EMA, right? Yes, indicators, EMA, and in this also we have the same types of EMS, right? Moving average, exponential, EMA cross, double EMA, triple EMA, MA with cross. Let me give a overview. EMA Cross will be having 990 period, nothing but a single line. Double EMA single line, triple EMA single line. MA with EMA Cross is nothing but MA line, EMA line. If EMA crosses MA line, we'll take a buy position. If MA crosses uh, nothing but EMA crosses below the MA, then we'll be taking sell position. And EMA cross is nothing but the regular that we use 5 and 20 standard, and the remaining all are single line. If a candlestick forms above the single line, we'll take a buy position. If it forms below, we'll be taking a sell position. Let's look at EMA cross on BTC. Yes, you can see over here. Let me for our flexibility, let me use what yeah let me use these candlesticks for 5 and 20, and the style must be this. Short is blue, nothing but 5 period, and long is red. Okay, long is red, and for the crosses yellow. Yes, good, we're good to go, I think. Yes, 5 and 20. Okay, yes, obviously exact. Where yeah, let me take a much. Okay, let me analyze from June. Let me take from June. Okay, keep this one. You can see that I have bought BTC of 0.00022 and of rupees 300 rupees. Yeah, where it has given a buy position. Yeah, let me take to that place. Yeah, you can see over here. You can see over here it has given a buy position over here. Okay, and where it has given a sell position, it has given a sell position over here, and buy position over here is around 21223 USD. And if you want to keep, you can simply keep it as INR in Wazirx. There is no problem with that. And this is the buy position, right? So, and the sell position over here is around 23484. You should not bother about the candles which are forming red in between, like this, like this, like this, like this, like this. Just you should give a buy position, because you are a risky trader, not a safe trader. If you want to become a safe trader, you should have deep knowledge of this candlestick patterns also. You can see, for example, I can give a example. I have kept a doge here. I have kept this vertical line on this doge, right? Which means it gonna form a reverse of the trend before to it. Before to this doge, we have a green candle, which is a bullish in nature, nothing but positive in nature. So it gonna form, it says this doge indicates it gonna form the opposite of the previous indicator. So it gonna form the bearish trend. So you can see the bearish trend till here. Okay, like this it gonna form. So simple cases, you can use EMA cross 520 and take buy position based on its indication, and take sell position based on its indication over here. And if you want to be more safer, we're gonna look at EMA with PSAR, parabolic stop and reverse, in future also. That gonna give you more accuracy than this and more profits. We're gonna look at that one also, don't worry about that. Yeah, you can see one more doge here also. Okay, it has formed, the trend of the previous was bullish. Okay, and after this doge it formed bearish. That's how you can look at. And if you want to take some other coins also, you can take whatever the coin it can be. You can take, you can see here this is a buy position, okay, and this is a sell position. So in this whole video we have covered all types of indicator, not indicators, right, all types of EMAs that we can use on a graph if we trade either trading view, either in Fyers, either in Wazirx or Binance or any platform. Okay, the EMAs are these types of EMAs, and these are the core logic of the EMAs. So whatever the EMA, if you want to, you can apply that and you can get decent profits. Okay, but a huge what do we call request from me is, don't, please don't trade without a stop loss. Please, this is my huge request. Please don't trade with without stop loss. Okay, and this is the end of this EMI. I think we can go for the next indicator in next video. And thank you for your patience, time, and listening to me. I think I have shared with you decent knowledge, and thank you very much. Please do subscribe, and try to make it reach more friends, yeah, and your family members. Hope you'll be good and healthy. Thank you, thank you, thank you so much.